Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to move over to soybeans because we were talking about that yesterday. These are the kind of trades I'm going to be doing Friday when our live session comes on between 9 and 12 New York time, live trading. We do 2 of these a month. If you're interested, go to Jacob, J-A-C-O-B, at TFNN.com, and he will sign you up. Our goal is to make a minimum of what the tuition is. I think it's $250 for the month, and we've done it 9 out of 10 times. This will be our 11th session here coming up here on Friday. But this was the kind of trade we were looking for today. Remember, we had this big move in beans we talked about. There's where our buy was, right down there. Remember, on the long-term, weekly and daily, had a gap up. Big ABCD. You can see the ABCD stretching up here. I mentioned yesterday, buy the 382 retracement. There it was right here. And you can see the ABCD pattern that gave us our first profit objective. There's your A leg, there's your B leg, there's your C leg, and you'll just draw this in. So you should be able to see it without too much trouble. Brought in right there, and it measured up to 77 and 3/4. The high was 80, and now it's down below this level right now on a really short-term basis. And this is too short, actually. You can see the small ABCD pattern that we have right here, but it is a good pattern. If you looked at it on a 4-minute, it would jump out at you like a typical rattlesnake here. There was our number, it was to be the sell, and now you'll see we had the ABCD coming down right now. And that should give us some pretty good support. Now, what we need to do now is we need to go back and measure from the last low that we had back here, because this was where the 382 was. We want to see what the new number is going to be when we match this up. And you match it up, and there it is right there. You want to be taking your profits on your soybeans right here because you're still in an uptrend, and it's made 7 cents. 8 cents, and you're only risking 4, so that's 2-1 in your favor. So that's the way you ought to do it. So anyway, that's what we're paying attention to here in the soybeans. Now let's look over to the gold, because we talked about yesterday about watch the gold very carefully. Now this is the intraday from early this morning. You can see the beautiful ABCD patterns up here, folks. It was just really amazing. Look at this. Here's your first A leg right here. Just going to draw them in for you. I know you love to see these, so we're going to keep drawing them in till you get blue in your face. There was your first one right there at 432, okay? The high was 432. You had another one right behind it right here. There's another one, A, B, C, D, right behind it right here. And that's also going to take you right up into that zone here at 431. Then we had the break, okay? The break came down, and then you had your first rally back. And you know what our rule is, folks. You know what that is, right? Yes, Johnny, I see. Put your paper down. We know what it is. There's your first 382 retracement coming in right there, right on the money, there at 26. And there it is on the way down at 15. It's already made $1,000. Look at this one, folks. The same exact pattern. There it is right there. There's your 382 right on the money. And that's how you keep an eye on these things once they start to move, because the whole premise, folks, is to get in without very much risk. Don't be concerned on the amount of money that you want to make. Be concerned on the amount of money that you could lose. That's what you have to do. You really have to do that. That's the key. Today's guest will be Mike Moore of Moore Analytics. We've got some wild things happening in crude oil today, so we'll cover that one here in just a moment, but I just wanted to go through that. And what we also should do is to take a look at Apple. If you remember, we were talking about that 382 we'd had in Apple yesterday. I said, this does not look very good, and let's get it up here, see if we can get it here, Mr. Appel. And right after that, folks, we will certainly do the Tesla that everybody likes. Okay, here was Apple. Okay, there was our 382 right here, okay? There it was. It matched it again yesterday. See, the same, almost exact number. There was your 382. Perfect, right to the old Tickerino. Hold on just a second here. There's your X point. X point is right over here. I'm just drawing it in to see it easier. There's your A leg, B leg, C leg. There's your 382 right on the money. And here now is $10 lower with lower lows, lower highs. We're getting pretty close to the profit objective on this short-term trade. There's your high that we made. This is just for 5 days, so you're going to be getting close to the bottom down in here probably tomorrow. So keep an eye on, well, it could make it today too, but there would be your 1.618 expansion there at 212. Okay, now we'll switch over quickly to look at Mr. Tesla. I heard it got beat up a little bit today, but that's the way it goes sometimes. Some days it's chicken salad, some days it's something else. Let's move up here with it. Tesla starts with a TSLA. All right, let's get the half hour up here so we can see it. Oh, wow, it did have that. Okay, there it was on the 30-minute chart. Wow, it did have a big move down. Oh, this is correct. This was the ABCD to the downside, folks. This is the one we did. There's your ABCD measured right to 238. There's your 238. The rally comes up, and where should the rally come? From the high down to the low. It goes a little above the 382, goes to the 50%, and then bada bing, bada boom. Look at this big move from 250 to 235. Big move to the downside here, folks. But it's not the end of the world in Tesla, and I'll tell you why. That just completes this bigger pattern right here. So there's your pattern right here. There's two of them. There's one right here. Okay, that measures to that level right here, but you've got the other one right behind it. And if you measure that from there to there, you went right down to it went to the 1.618 level right here. That was a really good support, but there's the problem, this big gap. So I would assume now over the next couple of days that Tesla is not going to get any higher than this 382 retracement that we're going to have right in here. That's what I'd be watching. But there's ABCDs all over this one. This is intraday, of course. Looking at this on the daily, you remember this easy enough because we've been watching it. There was the 78% retracement on the whole thing, on the whole range of Tesla from the beginning to the end, including the splits and everything like that. And all we're doing right now, there's the low today. Let's just clean all this out, because if that's a 382, you got to pay attention to that. Ta-da! And there's the 382 at 20. So we're trading above it right now, right into that gap. It didn't quite fill that gap. That could be very important today. So if Tesla can get a little goose today and stay above this 214 level, it's got a chance to still go higher just because of this 382 pullback, folks. You know how we feel about that, because it's a powerful thing for strong trending markets, and there's no question that's a strong trending market. Okay, I think we've got a little break coming up here to pay a few bills. Let's double check. No, we got 47 seconds left to go. Enough time to try to get in and look at the silver market. Silver's been much weaker than the gold, as you know. We've still very bullish longer term, but we're still expecting lower prices. This is the silver today. You can see it didn't do anything. I mean, look at compared to what gold did. I mean, this did nothing. It couldn't even, I think it might have made the 382. Yes, it did. It made the 382 off of the last high, which was, as you already know, 382 off of that other high. There it is right there. Bada bing, bada boom. And that's why you want to pay attention. So let's live every day in an attitude of gratitude and stay with the commercial, and we'll be right back. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I did this before the market, before my show started. The show started right here. We're completing this 3 drive to a bottom pattern. These are pretty good swings, folks. You're talking about 20 points or so in the 15 to 20 points in each one of those, which is certainly tradable. But if you'll notice this, if you move this over here and just look at it for the day, you'll see that this is the first time we've had anything that even resembles one of the patterns that we look at. All you had on the way down, and if you remember just watching the old 382, here was the early morning. This was in early morning. Okay, this was like at 4:30 in the morning. Here was the opening of the market right here. Now let's just double check to see if that was our favorite. Move on here. There it is, folks, right on the old Tickerino right there. This is a move from 43 up just 8 points, but there's your 382 right after the opening. You get another one right here, and the rest of the time it's just been one-way Corrigan all the way to the downside. Now, let's go to an hourly chart to find out where the very first resistance would come in. There was the ABCD we were looking for yesterday. You see that missed it by 2 points, and then down it came. And so this is why we're looking at it. Now, what we're looking for now, because we've got this action in here so far, that tells us that we're able to look to see what the next 382 pattern is going to be. So if you mark it from here, whatever this low is, it might not be this low, it might be a little bit lower, but start to watch for that, because that's when it gets you to the promised land. You remember that this is that big 3 drive that we had last Thursday? Look at that. There's drive 1, there's drive 2, there's drive 3, making new highs by 50 cents. And then down she came. There was your first 382. We talked about that one on last Thursday. Right to that. Oopsie daisy, got the wrong one. Let's plot this in and see where we are. And there was your 382 right here within a half a point. And then bang, bang, bang. And then this morning, early before the market came, you can see there's where we were. There was the 50%. 382 was right here. Your stop goes above here, of course, and it went just to the exact 50%, and then down she came, and that's why we're getting this little bit of a bounce today, because we have some type of that 3 drive pattern, which is the only one we've seen since early this morning, has been that little puppy right there, and that's all we're looking at now. So what would usually, this late in the day, if the market's still going to continue to rally, what it'll usually do, you see these ABCDs are absolutely perfect to the downside. We'll draw it in. So those of you that have not been on the program, we'll be doing all these 3 hours of this on Friday, folks. And we made some money doing this. There's your ABCD. We should make, at minimum, of a 1.618 expansion of this right up in here, which would take us up about 14 points higher. I know it seems like a lot, but you could make that very, very easily, okay? So let's remind ourselves that that's a very, very possible thing, and we're starting to move higher. And we had our first indication of that happening just a second ago. I know you guys like this short-term stuff. The short-term leads to the long-term, boys and girls. But let's just draw that last one in, and you'll see where did it start. Ooh, just missed the 382 by a heartbeat. That tells us we're going there, folks. 1515 is where it looks like it's going to go. Maybe not in my lifetime, but sometime in the future would be my guess. Okay, now we've had a question about the wheat. Let's get the wheat up here. Had a pretty good move yesterday on that short we looked at. There was your, whoopsie daisy. There was your ABCD to the downside. It went down and made a much lower low down in here, as you can see, and then it had a pretty good rally. You can see the rally came back up and went back up again. So looking at this on a little bit longer time frame, you're going to see both of them, okay? There was the first one right here. That was at ABCD from there, all right? And then we have another one coming in. Now, this was a little difficult because what happened was it exploded out of here, and it didn't give you anything of a chance to even get in other than this little tiny move right here, and you had to be a magician to get that one. So it went far above the ABCD, and we know the reason for that, don't we, boys and girls? Of course we do. There's your AB leg right there. There's your CD leg right there. And when you see the CD leg coming out of here like a rocket ship, what do? You multiply the AB leg by 1.618. Just mark that off like this. Come over to here. Make the CD leg 1.618, 161. And that's close enough. And that'll take you, whoopsie daisy, up to the promised land. Right up in here, and then we've backed off. So this is starting to look pretty good, folks, because the back off today so far has only been right at the 382. So it's telling us that there's a chance here that this could hold. But breaks this, then we'll be going a little bit lower. But that's what we're watching here in the wheat. Now, we've had a question about corn. Let's get the corn up here. It's been trying to get out of its way. Let's get this corn. Will be December right here. And see how we're moving today. We made a higher high, but it didn't really go very far. Let's see how the old ABCDs worked here on this one. You can see we've been doing these so many times. It's old hat, but there's your ABCD on the first one. Then you got the second ABCD coming in right here. There's your ABCD right here. And it doesn't quite make it. And then, of course, it makes the really big one right here. Right up at the top, there's your A leg, B leg right there. There's your C leg right there. And then today, this is today's action. So remember, we wanted to watch for a 382 pullback. So if you take the low right back here, when you have these strong folks, this is what we cover on this stuff. There's your 382 right there. I mean, it goes a half a penny below and rallies $400. Now, it made a new high. Okay, so your profit objective had to be in here somewhere because you're only risking 4 cents. And if you made 10 cents, you got to figure somewhere. Now you're reversing after a high like this. That tells you that, wow, it's a little bit more than one would expect. So that's what we're doing. And remember, these do not work all the time. There is nothing that works all the time except death and taxes. And you can get by all of those if you pray hard enough. But so far, I've not found that prayer, but it's getting closer. All right, let's move. Shouldn't even joke about the religious part, should I? Well, let's move on here to one other, which is our soybean oil. We really love this soybean oil. And it made the target yesterday as we spoke. Hold on right here. Get this back up here. There's where we were. There was the buy was right down in here. Here was our first profit objective was right here. There's your A, B, C, D leg right up in there at 45.20. We had another one that went a little tiny bit higher on this one. The last one went tiny bit higher. And now you can see here that we are already $1 or so. That's a $900 move to the downside. And I missed this one today. Shut the front door and raise the rent. From the high down to the low, there's your 382 right on the money. Let's draw it incorrectly, Mr. Pesavento. Otherwise, you're not going to get any believers. There's one or two of you out there. I know that. I've been doing this for so long. There's your 382 right on the money, honey. And then we're heading down. Oh, does that set up a beauty for tomorrow or for our trading day on Friday? Shut the front door. This is only Wednesday, though, so this will be done. There's your AB leg. There's your CD leg coming in right at the old 1.618, 43.51, down about another $500, and you're going to have to take a quick look at that. And we look at this on the hourly 4-hour chart. Make sure you don't miss anything, because oh gosh, remember this, folks. Remember that 42.60 that we're in love with? There's a chance we could make it. Oh my goodness, look at this. Getting too excited now. AB, CD, right there. This is where we load the boat. Boy, that's down a lot too. That'll scare the shorts, the longs, and that'll get you where you want to be long, right here, 42.70. Hey, let's take a break. We got Mike Moore of More Analytics in the house, and we'll be right back after a few words from TFNN.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and I believe we have Mike Moore of More Analytics in the house today. Michael, how are you doing, my friend?
How are you, Larry? Back from New York, so Good to be
I
home.
know. How was the Big Apple? Did they miss me?
Very good. Yeah, I loved it. Good to see everybody up there and spend a little time running around. So, yeah,
I remember those days from going to the New York Stock Exchange floor back in the 70s. Anyway, tell us what we're looking at in this crude oil market. Man, it's jumping all over the map, and there's war everywhere. What's going to happen with it, Mike? You've been
Can you
bearish
see my
so
screen?
far. Yes, we can see your screen fine. Everything's looking
Okay.
good.
So let's jump straight into crude first, and then we can do natural afterwards, I guess. All right. So,
You betcha.
Doing a little backup here because we weren't on last week. And the crude oil to break above 76.06, I brought in 846 of strength. That was put on hold. And then the trade below 80.82 has brought in 442 of pressure. I said, note we're in a bearish correction or trend against a move up from 72.23. And if a correction, we've entered the ideal time frame for an exhaustion area to hold. And these come in at 76.57 to 40 and lower. And we held this. We held this one right here with the 76.40 low, and it popped up to 78.19. So what does that mean when I say that we've entered the ideal time frame for the exhaustion area to hold more than temporarily? That means that this could be the start of a whole new bull structure, possibly similar to this kind of structure. If not, we roll over and we take this out. We have one last level down here to keep contend with at 75.22 to 74.29. But if we take that out, we're likely headed down to 17.42.
Okay.
And finally, one other note. If this was to gap open higher tomorrow, that would leave a minor bullish reversal below. Do you have any questions on that, or you want me to go to the RBOB?
Let's go with the gasoline, because I noticed gasoline, and I filled up my car just yesterday at $2.78. I haven't seen that price in several years for gasoline, so it must be dropping like a rock, like you thought it would. So that's in the middle of a seasonal thing where it should be strong. So that means it's really weak.
Yep, especially a lot of anticipation. Right.
Please go ahead, Mike.
So the unleaded gasoline also has just held exhaustion below here. So just as some backup on there, the trade below 253.65 has brought in 16.2 cents of pressure. And we had a couple other bearish formations in here I won't go over. I said, note, we held exhaustion for a second time with the 237.45 low, and it bounced 3.69 cents and even more than that today. So this here was the ideal exhaustion for it to hold. What does that mean? Again, similarly, you could see another stretch like this to the upside from here. If not, and we take this area out, we're likely headed down to the last exhaustion down here at 232.70 to 232.38. We take that out, we're likely poised to head down to the 225.79 area. Also, if we take this formation up above at 246.07, minus 2.3 per hour, starting at 1 o'clock p.m. Eastern Standard Time, that will project this upward at least 8 cents, or excuse me, 9 cents right there. All right, you want to go get heat?
Yes, sir. Let's do the heating oil. That's all. I'm very interested in that. You've piqued my interest over these last few sessions. Watching them both, boy, it's a big story to be told. So keep going, please.
Okay. So the heating oil, kind of a little slightly different picture here, but let me just do some backup. The trade above, we had held the final exhaustion above at 266.23. We talked about that in the last session that we met. We held that with the 265.95 high, and we rolled over 24.47 cents. And we had a number of other bearish formations in here. I put those all on hold. I said the trade above 243.29 warrants a decent strength. So that was the break above this line right here. We popped up, we rolled back over, and then bounced off it again, and then we're continuing to see strength. If we take out this formation above, that's going to warrant a decent strength. That's going to come in at 248.59, minus 4 per hour, starting at 1 o'clock p.m. Eastern Standard Time. Oh, excuse me. And that will also project this upward 9 cents. And if we take this whole level out here, we're likely going to head down to the next exhaustion level down here at 238.27 to 236.55.
Okay.
You want to look at the Brent?
Yes, sir.
Okay.
What is Brent still at a big premium to the WTI?
Trading 82.07, and the WTI is trading
78 or something, or
yeah, exactly, 77.88.
Well, that's
so
not my. Used to be a big premium, didn't it? Years ago. Yeah. Okay. Please continue, Mike.
I don't have any specific great formations necessarily here in the RBOB to make a prediction above, but in general, I said the trade below 84.68. We're under pressure. We've seen $4.17 of that. A maintain gap higher tomorrow would leave a minor bullish reversal below.
Okay.
So not a lot nothing spectacular to see in there. The gas oil is rallying a bit off these lows. Now the gas oil is right near a formation. This comes in at 755.95. minus 16 per hour, starting at 1 o'clock p.m. Eastern Standard Time. And a break above there will project this upward $27 plus.
Okay.
And then the natural gas. By the way, just for your listeners, I know I sound dry when I come on here. I do have a little bit more animation, but I like to just cut through a lot of this stuff so you guys can go back over and listen.
We're ready.
We're
ready. We want to see the charts. You're handsome enough for the way it is. Just show us the charts.
Okay, so natural gas. So on an overall basis, we've been bearish since $8.20.8. A lot of big moves down from there. More recently, we held exhaustion above at 322.10, rolled over $1.20.6, and a number of other bearish formations in here. 2 days ago, we left the medium-term bullish reversal below that warned a higher trade for days/weeks, but that is now today. That will likely be put on hold. As I said, a maintain gap lower would leave a minor bearish reversal above that. So right now, you can see we have the gap right now. The market from now through 230 would have to rally above 222.80 to negate that gap that we have right now. And so this would leave a minor bearish reversal above. The moderate bullish reversal has already been negated, and that compresses right back down towards the lows again at 201.50. Down below 201.50, I would caution, though, we may be in the last stretch of this move down here, likely the fifth stretch. You have exhaustion right here at 194.60, and another key one here at 185.70 to 180.90. What does that mean? If either one of those holds, we could start a bullish correction against this move downward.
Okay, we also have to take a break now, but stay with us, Mike. We'll be right back with more analytics and Mike Moore. Stay with us, folks.
Trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, talking with Mike Moore of More Analytics. Mike, could we take a look at the gold market?
Gold or S&P? Gold first?
Oh, either one. We'll do the S&P first because we're having a little bit of volatility here today. So let's take that one.
I got the S&P already queued up. So S&P, another large gap open lower today. Just as a little reminder from the last session we were on, we were bullish again recently from the break above 53.35. Overall, we were bullish from 35.02. We'd seen 2,219.25 handles to the upside, a lot of other bullish calls in here. And then more recently, we had said that the break back above 53.35 warrant of strength. That brought in 386.25 of strength. But more importantly, we held exhaustion right here at 57.19.75 to 57.26 with the 57.21.25 high, and it rolled over 179.25 coming into today. That was holding this exhaustion here. We held it twice and then came off, took out this formation, got short-term bullish in here and bearish again right here this morning when we took both of these out. But taking out this formation is a significant formation. I know I have a lot of lines on there, so don't let it confuse you. But nonetheless, taking out that formation, said decent trade below 55, 71.83. We'll project this down with 64 minimum, 136 plus maximum. And that was from 55.71, and we are down at 54.95. So we've already seen 76 already taken out the minimum. Still looking to see possible maximum. And I'd say 130 plus, because if it's trending to the downside, we can see far more than that. First main exhaustion area to be aware of down here is around the 54, 53 and a half, and 54, 50 area. There's also a formation right here. It comes in at 54.81 and a quarter, plus 5 per hour starting at 1:30 p.m. Decent trade below there will also warrant a pressure. If we come back up through this ascending line, which is going to come in at 55.73.87 plus 34 per hour starting at 1:30 p.m. Eastern Standard Time, that will warrant a decent short covering. I would be out of all shorts and looking for at least a run up into this level up here to 56.29, but a good likelihood of also running up for 57.21 and a quarter and higher. Okay, gold. Okay.
Yes, sir. Let's do gold. It's been good to me today, so let's see what's happening.
Sounds good. All right, the gold popped up today, rolling back over from the highs pretty hard. Let me just get this. Okay. So in the gold, this is a little backup also. The trade above 23.2760, which we were talking about on the last show, we attained 160.8 from that to the upside. And we had another formation here. We were looking for 15 minimum, 45 plus maximum. We attained 144.7 of that. Those are on hold. I warned that trade below 24.6480 to 24.6120 will warrant a decent pressure. And we've come off 76 from there. And then the trade below 24.11 plus 2.5 per hour projects this downward 75 plus. We've only seen 25.8 of that so far. So we've only seen 25.8 right here. We short covered all the way back up to the line and then rejected off the line today. If we take this line out on the upside, which is going to come in at 243, which is going to come in at 24.3120 plus 2.5 per hour starting at 1:20 p.m. Eastern Standard Time, that will warrant a decent short covering. And although it won't have a specific projection, the likelihood of it running up for 24 to 24.8840 plus is high. If this rolls over and takes out this formation down below, that should bring in additional pressure. That's going to come in at 23.8740 plus 1 per hour starting at 1:20 p.m. Eastern Standard Time. And one last thing in here is that we currently have a gap open higher in place. If this gap remains intact, that would leave a minor bullish reversal below. This would have to fail back down below. Oh, I'm sorry. It's already intact, right? The market's already closed, right? So 130. So that's already intact. This leaves a minor bullish reversal below. That being said, even though the minor bullish reversal was left below on the day itself, it warrants a pressure overnight, likely down into this gap before/if resuming higher trade. So if we trade down in this gap, reject out of it, that could give you an opportunity to get long. If this gap's open lower though and leaves the gap lower in place tomorrow, that's going to leave a minor bearish reversal above, negate this minor bullish reversal, and likely bring in continued pressure, likely for days.
Okay.
Do you want to take a look at the Bitcoin, or did you have any questions?
Yes, we've had a request about Bitcoin, so please let's do that one next. I don't even chart that myself, so you're my source. So let's fire away.
Well, it's hard for a lot of people to trade it because I think the margins are around 64 grand per lot. But
they said they had a micro. They have a micro contract, don't they?
Yes, I believe they do.
The micro contract is probably, well, who knows? I don't even know. I'm not just go ahead and show us what the chart looks like, buddy.
A number of my clients trade it. That's why they asked me to start charting it a while back. I know they trade the bigs, but I'm not sure if any of them moved over to the micros. So the trade above 56,740 has brought in 11,915 of strength. Trade above 61,045. Projected this upward 7,000. I think we were talking about that on the last show. We detained 7,610 of that so far. I said, note, we are currently holding exhaustion at 61,121 to 68,589 with a 68,655 high, and have rolled over a bit here. And decent trade above, give me a second, 71,588. minus 1 tick per hour. It's at 9 a.m., but you can just subtract that into now. We'll project this upward 18,000 plus. So we'll definitely be aware of that. And that's about it.
All right, listen, we're going to have anything else you wanted to cover?
That's about it.
How about natural gas? You got natural gas? We have a question about natural gas. That'd be a good one.
I might have people behind me, so I'm working from home today, and kids are home. People are picking people up.
Well, you can't tie them to a tree. Let them be happy. So
exactly. Okay, so the natural gas right here. Oh no, we did go over natural gas. Remember, because I said if we leave this minor bearish reversal.
Oh yes. That was first. Yeah, we did that right at the beginning.
Oh,
Sorry
one
about
thing
that.
I forgot to mention about natural though is if it breaks above this formation right here, which is going to come in at 221.70 minus 1.5 per hour, starting at 1 o'clock p.m. Eastern Standard Time. That will project this upward 125 ticks minimum, 370 ticks plus maximum, based off a well-formed formation.
All right.
And finally, if you break above there decently, back down through it decently, look for decent pressure.
Mike Moore of More Analytics. We're going to have you on again soon, so don't be a stranger, buddy.
Thank you, Larry. Thank you, everybody, for watching.
Okay, we'll be right back, folks. market's getting ready to make new lows, so stay with us.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the chart out of the Gottlieb book that we looked at that 20-month cycle. Remember, we're 20 months up in this, 20 months up in that, just like we were in the NASDAQ, exactly 20 months. And hold on just a minute. I got to turn that off here just a second. He thinks he doesn't know that I'm on a radio show. Anyway, there's the ABCD pattern. We've already done this on the NASDAQ and the Dow Jones. You already know that. The reason why I'm bringing this to your attention is people have asked me, am I expecting something like this? Folks, I'm not. It might happen, and that's why I said you got to be careful, but I'm not expecting anything. If this is the case, we're just right here. This is where we are right now. We haven't done anything. Of course, we've moved down, $15,000 in the, just a second here, just a second. Hey, Brian, I'm on a radio show. I'll call you back in a few minutes. Hold on. Anyway, that's an old-time customer from about 70 years ago. Well, he's not quite that old. Anyway, that's all I'm showing you here. This was the railroads, okay? Now, remember, our utilities haven't even taken out these highs yet. That's why it was part of the reason so bearish. I also wanted you to see all the ABCD patterns that were in here all the way down. You can see them one after another. I drew the last one in because this was the bottom on July the 8th when the Dow was trading at 42. Up here, it was trading at 383. It didn't take that high out for 27 years, folks. It wasn't until 1955 that it took that high out. And anyway, that's what we're watching here. Look at this. So just be really careful here, folks. We haven't seen the big draft down yet. This is just a test of what's going to be happening soon. So be real careful. Follow the patterns. Use your stops. You're going to be just fine, and we'll get you to the promised land and have a little fun along the way. So live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side tomorrow.